Hey everyone, Altria. That is one of the favorite stocks of dividend investors. It's certainly one of my favorite stocks, and there is some breaking news this week. The breaking news, as you can see on the screen right now, is basically the FDA, the Food and Drug Administration. There are some suspicions out there that they are moving to potentially limit the amount of nicotine that is in Altria's products that are sold here in the United States. And if the FDA goes forth and does that, there's concern that sales at the company may suffer, and therefore the stock price plummeted. And so I want to go through sin stocks in the video today. When it comes to sin stocks, I'm a seasoned veteran like Richie Rich. I've been in the game with sin stocks forever. And I own Altria, I own Philip Morris, I own BTI, I own Universal Company. Sin stocks actually make up 10% of my portfolio by dollar value, and they make up 20% of my dividend cash flow. So I have an exhaustive analysis that I want to share with all of you today in the video that goes through this situation in depth, and it gives my thoughts on how I'm approaching it as an investor, how much risk I believe this creates, what I believe the future is for sin stocks, because there is so much negativity out there right now. There is so much noise out there against sin stocks, and so I want to share my opinion. Now, it's late at night, and I'm going to stay up all night until this video is live. And so if you're staying up late at night for this Thug Life investing video, make sure to grab your cup of Thug's Passion like Tupac, or some of that Slurricane like E40. This is going to be an exciting video. Get ready, everyone, for another sin stock investing video. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone, so let's do this. I'm going to go through so much today, but I think to actually even talk about Altria, I first have to go through Philip Morris. Philip Morris International is basically the sister company of Altria. They're based out of New York, but all of Philip Morris's revenues come overseas. Now, Philip Morris has a licensing agreement with Altria on one particular product called IQOS, which is a heated product. I want to get into that. So let's go through Philip Morris, because they actually did announce earnings today, and that gives a huge backdrop for what I'm going to talk about with Altria. So check it out on the screen right now. And what you see on the screen right now is the results of Philip Morris International announced today, their shipment volumes for the various products that they sell. And you can see the first table has their traditional products, their combustible products. The second table has their heated products. And then the third table has the total. The reason I am showing this to you, and I'm going to get into some more number crunching later, is that you can see the traditional products are down in volumes across the board when the first quarter of 2021 is compared to 2020, but you can see the heated products are definitely starting to pick up the slack. And what's interesting about their heated products, IQOS in particular, it started out in Japan and it did really well in Japan. So you can see in East Asia and Australia, volumes in that region are up 28% year over year. But you can see that this success of this product is not limited to Japan. It's not limited to just that one region, because in Europe, European Union and also Eastern Europe, product sales are up, volumes are up, and they're up 37.9% year over year in the European Union and 29% in Eastern Europe. And what's so exciting to see is finally the IQOS product, which is a heated product. It is claimed to be a safer alternative to the combustible product. Many adult consumers are moving from the traditional combustible product to the IQOS product. That is gaining a lot of traction internationally. We don't see that here in the US every day, but this is why I wanted to share Philip Morris first. Let's keep going. Check it out on the screen right now. And so the next thing I want to show you is just their results. Philip Morris International reported record quarterly EPS performance despite the pandemic. When you look at Q1 2021, it's been driven by IQOS. That's the better than expected performance is driven by this miracle product. And basically, they achieved an all-time high adjusted diluted EPS, all-time high. You would think this is an industry that's going downhill. This is an industry where volumes are shrinking. This is an industry that's been under pressure. This is an industry that is a favorite of mine because there are very few new competitors entering this industry because it is regulated so heavily by governments. So the incumbents like Altria and Philip Morris International have a world of opportunity. And what's so exciting now is IQOS is now 28% of net revenues. This is staggering. This product that started out mainly in Japan a few years ago and has now picked up steam across Europe as well, and it's going global, is 28% of revenues. I'm going to get more into these numbers later, but that is just staggering. And think about what that means for the United States. I'll get into that later as well. There's been strong margin expansion, and they're actually increasing their outlook. They're raising their outlook. They're saying, hey, Wall Street, we're going to do even better in 2021 than we said previously. Philip Morris is doing really well right now. Let's keep going. Check it out on the screen right now. And so the next thing I want to show is just some quick summary data that came from the deck that Philip Morris released today. And they said that net revenues are up 2.9%. Net revenue per unit is up 6.9%. That's pricing power. Their margins are up. Their adjusted diluted EPS is up a staggering 21.5%. They are growing. And what's so exciting about this company is they are moving towards a smoke-free future. They are innovating. Sometimes you think that, oh, hey, disruptive innovation, that is isolated to where I live, which is in the Silicon Valley in the United States, in California. That is not true. There's innovation happening all over. It's not just on the internet. It's not just in cryptocurrency. It's elsewhere. And what Philip Morris and Altria have been doing, they've been innovating in their traditional line of business that they're in. And they are moving towards a smoke-free future. So check it out on the screen right now. And basically, they are saying at Philip Morris, again, this is Philip Morris, it's not Altria yet, but the reason I'm sharing Philip Morris first is I believe this also forecasts the future for Altria. And I think Altria, as a sister company of Philip Morris, will follow suit. And a lot of these trends are going to pour over into the U.S. But you can see they are on track for 2025 majority smoke-free ambition. And so what's going to happen in 2025 is over 50% of their revenues are going to be coming from smoke-free products, aka their heated products or other alternatives as well. And so this is something that I think could clearly pave the way for something similar in the US. Also, what I want to highlight on the screen right now with Philip Morris International is they're really good at working with different governments all around the world. These companies are absolute experts at working with governments. Altria only has to work with the US government and the US government entities like the FDA. Philip Morris International, they have to work with governments all around the world. And as you can see on the screen right now, they're working with governments all around the world to sell their heated products, to sell their existing products, to fit into the landscape and to do the right thing for their consumers, for the company, for the shareholders, for the government, for everyone. It is a delicate balancing act, and they are good at the game. And I want to remind the investing community out there that Altria, a lot of the leadership over the years, this used to be the same company. They split apart a while ago, and this was to mitigate risk for shareholders, to keep the international business separate from the U.S. one, because there's a perception there's more risk in the U.S., and I think we're seeing that pan out. Certainly it's priced that way in the stock market, having Altria have a lower PE ratio, but they still share best practices. They still share personnel in certain respects, that people that used to work at the combined company, some of them are at Altria, some of them are at Philip Morris. I'm sure they talk. And so this heritage of having a way of working with the government, it is still there at both of them, in my humble opinion. Let's keep going. Check it out on the screen right now. The last slide I want to share from Philip Morris today, from the Philip Morris overview, is just this international map, the globe, if you will. It is so interesting to see that they're, even though this company has been around since the beginning of time, basically, they have a target of being in 100 markets in 5 years. And they are saying right now they're only in 66 markets. And so it's so exciting to see that this company is going to keep progressing. This company is going to keep going. And it looks like this in particular is reflecting where the smoke-free products are available. And so they're going to get this smoke-free products from 66 markets to hopefully 100 markets over the coming years. And so that's really exciting. Now, what I want to do next is I want to go into some slides, some information from Altria. This is not from Q1 because Q1 Altria hasn't been released yet. It's going to come out really soon now. I think it's sometime next week. It's coming up. It's right around the corner. But I have some slides from their last quarterly report from Q4 2020, and then I'm going to get into a comprehensive analysis and some take home. So let's get into Altria really quickly. Check it out on the screen right now. And so with Altria, the first thing I want to show is just Q4 results and 2020 fourth quarter, full year, etc. And you can see the results here. This company is not growing quite as quickly as Philip Morris, but I think that could change. That could change at any time. And you can see for the full year, adjusted diluted EPS was up 3.6%. So not huge growth, but hey, that's nice. I will take it. But the reason actually I want to show this, and what's so important to show on here, is this. And I quote, "Our traditional businesses were resilient, and we made steady progress towards our 10-year vision to responsibly transition adult consumers to a non-combustible future." So the reason I'm bringing this up, the reason I'm sharing this, is it echoes PM, Philip Morris International. They have paved the way, and with Altria, they're going to do the same thing. They're going to work with the FDA. They're going to work with the government. They're going to work with the consumers. They're going to work with the shareholders. They are going to make all stakeholders happy, and they're going to move towards a non-combustible future. And so you start seeing the dominoes fall into place internationally, and you see the beginnings of that kind of trend, and it gets you thinking, going all the way back to the beginning of the video. Hey, FDA says this or that. You just start thinking, okay, even if that does happen, maybe sales for their traditional product, maybe it even goes down. Well, does it move consumers over to the newer product quicker? Perhaps. I want to talk about that a little bit later. I think that's really important to recognize. And what I'll say is on the new product, the IQOS product, the margins are better. The cost of it is even more expensive. It's more lucrative, if you will. And so that's something to keep in mind. Let's keep going. Check it out on the screen right now. And so the next thing I want to talk about is non-combustible products. So this is just an overview of their non-combustible products. And in December, the U.S. Food and Drug Administration authorized IQOS 3 for sale in the U.S. This was huge. In the new version, it's more technologically advanced, longer battery life, so on and so forth. The old 2.4 version had already been authorized for sale. And the older version, the 2.4, it had actually been authorized as a reduced risk product. The version 3, it is not authorized as reduced risk yet. Now, one thing I will say based on my own research of this company is the IQOS, it's in very limited markets right now. It's only in Atlanta, Charlotte, Richmond markets. And I quite frankly don't understand why Altria is not just really ramping this up quicker. And I did a little more digging. It does seem like maybe it's a production thing, or maybe it's just a caution thing because they got hurt so badly with Juul that they want to play it a little bit safe and roll it out slower. But what's forthtelling to me is that not only did IQOS work in Japan, but it's working wonders in Europe as well. It's not just Japan. It's something that appeals to consumers elsewhere. I don't see why it couldn't be a huge hit in the US. And anyways, it does say they're going to expand the sale of these products into 4 new metro markets and surrounding geographies in 2021. So I'm surprised, quite frankly, they're only looking to expand to 4 metro markets in 2021. I'm trying to be holistic here. I'm trying to be realistic. I'm trying to share all the viewpoints. And if there's one thing I saw out of all of this so far that I don't like, it's that Altria ramp it up quicker. And so maybe though they're being cautious after they've had so many catastrophes over the last few years with things like Juul, Kronos, etc. And so with that, let's keep going. Check it out. And so you can also see on here in the oral products segment, they do sell oral products. And with the On brand of oral products, they are having a lot of success as well. And my understanding is this is a product also that is non-combustible, and it's one that helps customers segue away from the traditional products, the combustible products, to something that may be, according to the company at least, of better risk metrics associated with it. So something to keep in mind as well. They are moving in that direction. They're just behind where Philip Morris is. Let's keep going. Check it out on the screen right now. And so the next one I want to share is just, here it goes. The US FDA authorizes the IQOS as a modified risk product. And this is IQOS, the old version 2.4. And so we'll see if version 3.0 comes out as a reduce risk product, but certainly I hope that that happens. Now, at this time, what I want to do is I want to go into my comprehensive analysis. Before I do that, if you enjoy the video, if you appreciate the knowledge I'm sharing here on YouTube, I stay up late at night doing these videos. I love the community. Please go ahead and smash that like button. It really helps me out. It means the world to me. It gets this video into the hands of more dividend investors out there. And please subscribe with the notification bell as well, because I have so much content on the way. And I know a lot of you watch these videos without subscribing. I see it in the metrics. My personal goal is 100,000 subscribers, and if I get there, it will help incentivize me to do even more videos. So if you're on YouTube, even if you've never subscribed to a channel before, maybe consider making this your first subscription. It really would mean the world to me. It would really help me out. And also, just so all of you know, I'm on Patreon. I have over 260 patrons over there. If you want even more bonus content, I'll link to that in the pinned comment below. I have some really cool bonus content below in the pinned comment. Link to it on Patreon. All right, everyone, let's keep going. Check it out on the screen right now. And so what you see is my analysis, and I'm going to go through Altria and Philip Morris. And so Altria is trading at 47. It's down about 10% on the news of the FDA looking to bring back the amount of nicotine that's in their products. And it's trading at a forward PE of 10 this year, 9 next year, 9.69. It has a dividend yield right now of 7.29%. And I love the fact that the payout ratio is 75%. They want to keep it more at 80%. So I think they'll continue to grow the dividend. 5-year compound annual growth rate on the dividend is 8.8%. So that's the metrics. I'm going to get into some of the text below in a minute. On Philip Morris, the metrics is it's trading at 94. It's trading at a PE of 15 this year, 14 next year. It has a dividend of 5.11%, 80% payout ratio, slower dividend growth at 3.3%. Of the two, obviously, Altria is priced as a bargain. Philip Morris is priced, I'd say, at fair value for what it is. I love both of them. I have a much bigger position in Philip Morris. I have a much bigger position in BTI. I have a smaller position in Altria, although all three are pretty good-sized positions. Universal is the smallest position out of my SIN stocks. And I do this for a reason. I've always overinvested in PM and BTI from a risk mitigation standpoint, because I've always thought more favorably of a global perspective in an industry like this, because in the United States, there's a lot of regulations that companies have to, in this industry, have to deal with, like Altria. And quite frankly, that's why it is priced at the levels that it's priced at. But when there is risk, there is an opportunity for reward, and that's why the starting dividend yield is so great. Let's keep going. Check it out on the screen right now. And so what I want to point you to is the text on the bottom of the screen. What I would say with Altria is Q1 results are just around the corner on April 29th, and they're moving towards a non-combustible future, as I had said, 10-year plan. IQOS has huge promise. The rollout is slow, and but the rollout is slow. And I'll say they're not able to sell it as reduced risk yet on the 3.0 product, but they are able to sell the 2.4 version as reduced risk. Don't forget that Altria owns 10% of Anheuser-Busch InBev, ticker BUD, and that value of that stake is approximately $13 billion. So $87 billion market cap for Altria, but $13 billion of their value is just in that BUD stake alone. Now, keep in mind that they paid $12.8 billion for a 35% stake in Juul. That's only worth $1.6 billion now. This was a tremendous mistake that still weighs on the company. That being said, maybe Juul will come back as a reduced risk product. they can co-market perhaps with IQOS. I don't have huge hopes, but that's something to keep in mind. Now, also keep in mind that Altria invested $1.8 billion into Kronos Group, 45% stake. I have a huge faith in the long-term promise of cannabis, and I think that that's the wild card in this industry. I think this steady Eddie industry could totally turn into a growth industry, a high-growth industry, if cannabis takes hold and gets legally approved in all of the states nationwide in the United States. So something to keep in mind. Now, what I want to say with Philip Morris is, you can see in the text on the right-hand side of the screen, they had adjusted diluted EPS growth of 21.5% growth on an organic basis. Now, here's where things start getting really interesting. The traditional product volume was 145 million units in Q1. Heated product, 21 million units. Traditional product down 7.3% versus last year. Heated up 29.9%. Now, IQOS, though, it says it's now 28% of net revenues. And basically, they're going to have over 50% of revenues heated by 2025. But here's where I started crunching numbers. Okay, if I take the 21.7 million products heated as a percentage of all of their volumes, it's 13% of volumes. But what the miracle here is 13% of the volume is making up 28% of net revenues. And so again, let me repeat that. Philip Morris International, 13% of the volume of the product that they sell is deriving staggering 28% of net revenues. And so keep that in mind. If this thing does take hold in the US, Philip Morris has a licensing agreement with Altria. If Altria is able to get this thing from, say, 4 metro markets to all of the metro markets, and it works, and it gets people on something that is potentially safer and less harmful for them, and maybe it's even accelerated by what the FDA is doing with nicotine in their traditional product, could it be like a win-win-win for everyone? And so it could be financially rewarding for shareholders. It could be rewarding for consumers. It could be rewarding for FDA health type goals. It could be rewarding across the different stakeholder groups. And so that's something that I think is really, really interesting. But let's keep going. I want to summarize everything. Check it out on the screen right now. And so what I want to summarize basically is that SIN stocks make up 11% of my portfolio, 20% of my cash flow. That's the backdrop. Investing comes with risk. There are many different forms of risk, but some of the risks that could pop up with investing, dividend investing, include valuation risk. Maybe I'm paying too much for something. Government risk. Heavy-handed government comes in and says, hey, consumer, you can't do that. I'm going to tell you how to live your life, etc., etc. There's that type of risk. Sales volume risk. Hey, are sales volumes up? Are they down? Is the product, do consumers like the product? Do they not like the product? And then there's competition risk. Does a competitor come in with something better? I'll tell you, with something like Altria, the valuation is certainly not a risk. It's a deep discount. Government, yeah, that's a risk. Sales volume, I'd say it's not a risk. A lot of people say, oh, it's declining sales volume. They got pricing power, and quite frankly, the trends in Europe and Asia with the heated product give me a lot of faith in sales volume in the US. And competition, there's no risk. There will be no new competitors. That's one of the things that Peter Lynch likes the most about SIN stocks, is that very factor alone. And so I want to keep going. Check it out on the screen right now. Just a few more summary items. And so reports that the FDA may limit nicotine, it's more complex than it looks. Honestly, it would likely take years to phase it in, so even if this happens, Altria will have time to figure things out with IQOS and really ramp it up and get that rolled out, and there'll probably be years to negotiate and kind of come to a middle ground with the FDA. I think there are black market concerns. I think if the FDA limits it too much, consumers may turn to the black market. Certainly the FDA, the government, does not want something like that, so I think that's something to keep in mind. It could lead to non-combustible products growing quicker, which are more lucrative. I think so. And there's also this wild card. Consumers just buy more of the traditional product to get the same amount of nicotine. Boy, I hope it wouldn't lead to that. That's like the law of unintended consequences, but it's possible. And so I think the FDA really needs to think about that. I would say government relations at Altria is strong. It's funny, like the stock tanks on this news, but I'm sure Altria has known about this risk for years and has been managing it behind the scenes for many years. These guys operate a diversified business that has a lot of upside potential. And so I think people even forget how diversified the business is as well. Now, let's keep going. Check it out on the screen right now. In terms of my personal situation, I have very little fear of this industry facing too much trouble. All of that being said, I think we need to watch the government more now than ever. In recent years, the government has gotten more heavy-handed. The government has gotten bigger. The government wants to play more of a role in the decisions. I think there's unfortunately, I think there's not as much trust necessarily in the average person these days. And I think there's a prevailing belief that the mind of the consumer needs to be made up for them. I hope things don't go that way, but it sure seems like those trends are kind of coming. And what will happen of all of that? We need to keep an eye on it, especially investing in this type of industry. I will say I have a large concentration of cash flow, but thankfully from a capital standpoint, it's only 10%. Well, I say only, it's still a lot. But even if I take a 50% loss on all of my positions in this industry, which I don't think would happen because the lion's share of my money is actually in Philip Morris and BTI, which are more globally diversified and carry less risk. But even if I took a 50% haircut, that's only 5% of my portfolio. And so that is how I look at it. But at the same time, I need to mitigate risk. I'm not adding too much more at this time. I may add a little, but given where my portfolio is, how mature it is, I'm not reinvesting dividends right now in these companies. I'm using the cash flow to establish other positions in other industries. Although I would say, quite frankly, if I were the younger Ian, if I were starting over, if I had a smaller allocation, I would look at things very differently. The reason I look at it the way I am is because I have a huge allocation towards this particular industry, and I've been really successful at paring it down over the years, and I've made a lot of progress against that goal. But honestly, until my cash flow from this industry is no more than 10% of my cash flow, and my capital in it is no more than, say, 5% of my total capital, I don't want to add too much more. I'd rather rebalance by adding capital to other sectors, other positions in my 50 dividend stock portfolio. So if you enjoyed the video today, please go ahead and smash the like button. I'm going to be up late tonight editing this thing, getting it live, because so many members of the community on my Facebook group, on my Twitter, on my Instagram are reaching out, asking about this. On my Patreon, I want to get this out for the community. And so please smash the like button, and please don't forget to subscribe with the notification bell. Even if you've never subscribed on YouTube before, please make this your first subscription. It would really mean the world to me. Help me get to 100,000 subscribers, and then I'll have even more videos for all of you. Put in the comments below what you think about Sin Stocks, what you think about this announcement. I would love to hear. And obviously, it's a controversial topic, so let's just keep the debate professional in the comments below. And I'll tell you, I've even debated myself on this thing. There's been points in my career where I'm all in on Sin Stocks. And one of those points, quite frankly, points in my life is right now. I'm not putting more because I'm already in it, but I feel convinced in the positions that I've taken in these companies. But there's been other times in my life where I felt, hey, Ian, should you be investing in these things? Is it the right thing to invest in? Ultimately, what changed my mind to bring me to where I am right now is I believe in adult consumers having freedoms to make choices. And I believe in America, land of the free, being able to have the freedom to make choices in life versus being told what to do. And so I believe it's up to every adult consumer to exercise responsibility in their actions. And so that's why I'm back kind of on that track of thought that, yeah, I own it. I'm happy I own it. I want to be careful not to over allocate, but it's part of my investing portfolio, and that's that. So anyway, everyone, before I leave today, in terms of a full disclosure, I am long Altria, ticker symbol MO. I am long Philip Morris International, ticker symbol PM. I am long Universal, ticker symbol UVV, and I am long BTI, ticker symbol BTI. In terms of a friendly disclaimer, today's video is not licensed. I'm not a licensed investment advisor. Today's video is not investment advice. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. Investing in the stock market, especially sin stocks, it's controversial. It contains a lot of risk. It's possible to lose a lot of money. So please proceed with caution and consult your licensed investment advisor first. Also, so all of you know, I have a brand new YouTube channel in cryptocurrency. I'll link to that in the pinned comment below. All right, everyone. Well, I'll see you in the next one. I'll see you in the comments below. I love you all. Have a wonderful week.